And Wall Street closed sharply lower on Friday, with benchmarks posting steep losses. And this as inflation fears intensified and geopolitical tensions escalated. Tech giants led the decline, while small cap stocks confirmed a correction. Investors now brace for continued volatility amid rising oil prices and uncertainty over the Federal Reserve's next move. Now, our next report decodes this for you. Take a look.
Wall Street's main indexes ended sharply lower on Friday, with the Dow dropping nearly 1%, the S&P 500 falling 1.5% to close at its lowest level in 6 months, and the Nasdaq shedding 2%, nearing correction territory. The small-cap Russell 2000 also plummeted, spiraling 2.25% to confirm it is in a correction. Investors' worries about inflation deepened as the U.S.-Israeli war against Iran entered its 4th week with no signs of easing. Shana Orsic-Sizzle is founder and CEO of Bonrian Capital Management.
I don't know that volatility is going to start to subside anytime soon. The headlines continue to be fairly concerning. Inflation is higher, oil is higher. Stress on the U.S. consumer has consequences. And I think this is a good reminder to investors who are fairly new to the game, aka 20 years or less in the market, that we were experiencing an unusual period for investors of low volatility and strong markets. That is not the norm.
Wall Street's most valuable companies declined, with Nvidia and Tesla losing over 3% each. Alphabet, Meta Platforms, and Microsoft all lost about 2%. Shares of Super Microcomputer plunged more than 33% after 3 people associated with the AI server maker were charged with smuggling at least $2.5 billion of AI technology to China. Rival Dell closed slightly higher. Meanwhile, just 2 days after the U.S. Federal Reserve projected 1 rate cut this year, rate futures on Friday showed the Fed is more likely to raise interest rates than cut them by the end of 2026, according to CME's FedWatch tool.